To go out to the member counties of the Washington County District Pool and tell you what's going on and with the pool, how your participation in the pool is, and any changes that have occurred. So, myself, David Goldsmith, Member Services Manager and Executive Director of Vyrle Health, and then to answer any questions you might have. So we're going to do that, since you've already been through the rookie school that we teach, we'll do the condensed version so that we can get into the question and answering part. But our mission is threefold. One is to provide that comprehensive and economical risk coverage. And we're going to talk about two aspects of it, both the comprehensive side of it and the economical side. You did get a change in your premium rates this year as a result of some experiences. We'll talk about that and show you where that came from. And secondly is we've made some modifications to the policy. And so we'll talk about those as well. Reduce the frequency and severity of losses. That goes through the loss control program. A lot of things that Lorna and Philip are dealing with in terms of educating our staff on procedures and those kinds of things. On the pool side of it, we spend a considerable amount of effort in education and loss control training, and understanding that the economic situation with all the counties is that training is an easy place to cut back, and from a risk standpoint, that's the worst place to cut back. So we've actually kind of rearranged our business a little bit to make sure that those items we can provide on your behalf. And so we're there to make sure we deal with these issues. And third is to decrease the cost incurred in managing and litigating claims. And that really goes on to our side of the ledger in terms of our claims handling procedures internally. And because of some of those procedures, some of these claims have gotten away, and so we're going to kind of tighten down a bit, if you will. But who we are, we're 28 counties throughout the state. We're big, small, east, west. We're not the three big ones. The major exposure unit is how we determine the size of your premium is based on worker hours. King County has more worker hours than all 28 of those counties put together, so to give you an idea of the size of that dog versus the rest of it. There is a competing pool. It's structured completely different, although it's going through a complete change. There's new rules affecting pools and how these self-insured entities operate, and so they're restructuring themselves in order to come in compliance with those rules. And we don't know exactly what they're offering anymore. We do know that when we have members that look at that as an insurance alternative that come back and said it's not as comprehensive and it's more expensive. So we think we're doing the right thing. So what's covered? Just about everything and anything that yourselves, your fellow elected officials, your employees, your volunteers, or agents acting on behalf of the county could do and get yourself in trouble. It is a tort liability policy that deals with it. So we're dealing with tortious activities. Anytime there's a bodily injury or property damage as a result of some action of an employee, volunteer, or agent, the policy kicks in. We also deal with certainly employment practices that's included within it. That's a fairly major section in terms of losses that have occurred over time. In the public sector, there's some serious laws that deal with procedures and policy that need to be carried out very specifically that aren't akin in private sector. So we have kind of double duty to do when we deal with employment practice issues. We also cover automobile liability, but again, it's third-party damage, so we don't deal with your car, but what your car damages. Most of the vehicles are in the ER&R, and there's a replacement account set up for each of those vehicles. It makes more sense to do it that way than pay for insurance per vehicle. So that's what we do. We're also part of the property program, and the property program, and I'll go into it a little bit, it's basically a group purchase. The liability program is self-insured. That is, we have this big giant bucket, and in that bucket we put premium dollars. Out of that bucket we pay claims or buy what we call reinsurance. We take our policy, which is 11 pages in length, so it's not a lot of verbiage, smaller than your homeowner's policy, and certainly a lot more comprehensive than your homeowner's policy would be. But we take this policy and all of its exposures and our history and go out into the marketplace every year and buy the insurance that Safeco buys. So we go out and compete against that capacity in the marketplace and sell off that risk. And that's a business decision. We could hold it. The board of directors every year sit down in July and determine whether or not we're going to hold the risk or we're going to sell it off. Right now it's cheaper for us to sell it off than it is to hold it, but we could very well, that could change around as market conditions change. The board of directors of the 28 counties, and each county has a member, and Philip was at the last, in our July meeting, do two things in July. They set the insurance rate, your premium charge, and they set the scope of the coverage. And so when there's a change in the scope or a validating of the premium that's done by the members, and the members can decide how they want to do that. They could hold some of the premium back, they could decide not to cover things or open up the policy. It's up to the membership because it really belongs to the membership in total. We don't provide crime, environmental, public official bonds, special events coverage, but we are a vehicle for those. So if you had somebody that wanted to use a county road for a road rally or something like that, we don't provide the coverage, but we can facilitate that on your behalf. So we see ourselves as kind of your full insurance agent, if you will. There was some changes to your policy that I wanted to bring to your attention, one of which I know is going to be, Commissioner Sullivan and I already talked about it one time, is the change to covering under the Public Records Act. And let me explain how the pool got into covering and why they chose not to. The Public Records Act, it's a violation of the Public Records Act, creates a finable event. A fine is not a tortious activity. There's no tort associated with it. It'd be no different than a traffic fine. If you speed, you get caught, you pay the fine. If there's a public records request, don't do it right, get caught, there's a fine. I mean, that's just kind of how it works. In the early days of the Public Records Act, there was a lot of confusion over what was covered, what was not, what could be redacted, what couldn't, and all those kinds of things. And so the pool had this thing called a pre-defense review, and it's a little bucket of money that sits aside that when there's a potential of a claim or a lawsuit coming through, that we can use that money to provide some early defense work and investigation work and try to help the county to package it up so it doesn't get blown out of proportion. That money was used to help the counties trying to sort through this public records thing, and as a result of that, then we kind of backed into the defense of when it finally came to a situation where somebody had taken us to court. The board of directors looked at that and was brought to our attention by the reinsurance folks, and they said, well, wait a minute, how are you covering this under the terms and conditions of this policy? Because this is a fine that's triggering it, not a tort. And the board of directors said, geez, you're right. We got a problem here because our policy wouldn't cover. Now, most of that activity is well within your deductible, so it's not like it's costing the pool a bunch of money. It's a question of who's going to defend it and how.